This top portion, what I've highlighted here, is basically the forecasted supply-demand balances for the next 2 to 3 years. The top portion is going to be aluminum, the bottom section, and I've highlighted the balance at the very bottom of each table. Basically what this is saying is, and this is from JP Morgan, different banks have different forecasts, but what it's basically saying is, if we assume production is somewhere around 70,000 metric, or 70 million metric tons, it is in thousands, I sincerely apologize, then the surplus that would be expected over the next 2 to 3 years is somewhere around 300,000 tons, which is actually a pretty balanced market. So I would say in the aluminum space, it actually looks like it's fairly well balanced from a supply demand standpoint, using these forecasts as a proxy. When we look down at the nickel side of things, and we assume refined production of, let's say, 3.5 million tons all the way up to 4 million tons, there's an expected surplus that's pretty sizable for the next 3 years. And you can see that just comparing it to the prior years where we've had a number of years of deficit. We're now expecting to see, as Indonesia continues to ramp up its Class 1 nickel, there's an expectation that's going to feed into surpluses of Class 1 and Class 2 nickel, which ultimately will or could weigh on prices if that's how it plays out. I think the one real linchpin in all of these forecasts is what Indonesia does. If we continue to see nickel prices go down, there could be a price level to which Indonesia might say, hey, we need to start rationing production because we're kind of flooding the market with too much material. So that's the main headline that I keep my eye on. Otherwise, if we assume these forecasts are accurate, if we assume Indonesia continues to ramp up its Class 1 nickel production, we're going to have a lot of nickel for the next couple of years as we continue to ramp up into maybe an electric-based vehicle future. And you can see it visually here in this chart. This is a 5-year chart of the LME nickel price. And it's really just been a multi-year unwind of that big short squeeze. And I think for many of our customers, it's going to be a very welcome thing. But in terms of, where do we ultimately hit bottom? Where does it stop? The nickel market is a little different than the aluminum market in the sense that the cost curve isn't quite as flat, meaning you could have decent sized moves in the price of nickel and you still have a lot of producers who are still making money. And you can kind of see that in the slope of this line right here in the middle of the chart. What it's basically saying is, even though right now where we're sitting at right on, let's say it's $8 per pound, we're right around the level whereby 25% of nickel producers are not making money. I think the issue is there's so much new nickel supply coming online that's coming online at a very cheap rate that this supply is actually weighing things down further to the left-hand side on the cost curve, and it's allowing nickel prices to find a new bottom. And that new bottom could be as low as $6 to $6.50 if we really dig into the cost curve. And it's really because of the shape of this cost curve that allows the pricing sensitivity to be so severe relative to supply-demand conditions. Again, very wordy way of saying it looks like, unfortunately, the downside move for nickel prices could be a ways away, even still, despite the fact that we've seen nickel prices under a whole lot of pressure in the last couple of months.
Okay, yeah. So if I'm reading that right, so then like the nickel price going up, that bottom line is that 50% where there would be.
That's right. Yeah, and we have seen that in prior cycles. If we were wound back to like 2017, probably 15 to 17, we would fairly consistently see prices that were $4.50 a pound, $5 a pound. And at that point in time, it was truly the case that nearly half of the market was underwater in terms of their production levels. So it may be unlikely. We may have to have a recession in order to get down to those types of prices, but they're certainly within reason if you get a real slowdown on the demand side. And one thing I would add to all this is, with the auto workers strike, one of the things that came out of that resolution was both Ford and GM announced that they were going to curtail their investments into the EV space. So basically, several $1 billion are essentially that were earmarked for EV growth is now kind of being taken off the table because that money, in essence, is getting spent elsewhere on labor. That really does put a dent in the story, at least in the short term, for the the growth of EVs within North America and potentially globally, if that's a real theme that takes place. So I would expect that to weigh on nickel prices, lithium prices, basically anything that goes into the battery space with regards to EVs. So it's a little bit of a dent in the story with regards to that development.
And further complicates the supply story too, right? Because that leaves extra supply.
Yeah, for sure. I mean, yeah, all of this is happening in the face of in Indonesia, which is let's say roughly 50% of the global market. They're ramping up production, not down. So yeah, it's a difficult combination of events from a supply demand perspective. That's for sure.
Yeah.